Another day, another flash crash, this time resulting in a drop so massive it was truly shocking simply because of the conglomerate's size. This isn't a penny stock. When this type of activity occurs, you have to become weary about the potential dangers as liquidity dries up, leaving more potential issues. This is getting more and more interesting. You came here for the truth, so let me unveil that for you. I have a quick video to talk about the 83% flash crash. So let's begin with this article out of Bloomberg. Fat finger blamed as centuries-old conglomerate loses $41 billion. The stock plunged as much as 83% in the pre-market trading. So all of these traders, they said it's a fat finger, but I'm going to show you otherwise in just a second. Jardine Matheson Holdings, the centuries-old conglomerate, plunged 83% before quickly recovering, traders speculating that a fat finger error had caused the dramatic drop. Okay, so I wanted to make note the fact that the stock did come up afterwards. It's not as if it flash crashed and remained there. The Singapore listed stock sank in pre-market trading as shares changed hands at $10.99 compared with Wednesday's close of $66.47. It's now reversed most of the loss. So let's take a look at the chart right here and you can see it for yourself. Looking at that cliff, it falls off on the right hand side. It is truly something mind-boggling because this isn't, as I said in the introduction, a penny stock. We are talking about a big corporation and it just went right down to the floor. In fact, when you look at the chart historically, we're going back to levels we haven't seen since 2004. Of course, as I said, it recovered immediately. However, it is worrisome when this occurs. Now remember the traders talking about the fat finger? Well, take a look at this. When you slow it down, it looks a lot different. You can see here for yourself that there's this step down motion, which to me seems very much like a computer algorithm starting to trigger further and further down below. And yes, it went down 83% at one point, and then it was picked up here all of a sudden in a rescue that was achieved in one way or another. I don't want to speculate, I don't know, but I'm just showing you what has happened, documenting it, because I worry about the flash crashes that are going to occur in every major market around the world. I mean, we see them all the time. There's a recovery that happens after. I do believe that we will have some circuit breakers that trip and we're going to have some very big problems. This is going to cause a lot of halting in the stock markets on a consistent basis. They're going to open it, they're going to trip, they're going to open it, they're going to trip, and you're going to have some big problems all around. I do believe that we will have this several times in every major market. I'm just going to give you some brief analysis about this company here. The Jardine Matheson Group, founded in July 1832 in China and headed by the Keswick family, was one of the Hongs or trading houses that shaped the development of Hong Kong for more than a century. After moving its listing from Hong Kong to Singapore, the group gradually shifted its business towards Southeast Asia. And now check this out. It also has investments elsewhere, including in Rothschild and Co. Now, this is very interesting that this company is connected to Rothschilds. I don't mention this because I think that somehow there's something deeper going on here. I just wanted to show you the connection in between the two to give you some further insight and to broaden your knowledge about both of these companies. So let's look at this article back from 2005. Jardine's returns to banking with Rothschild stake, and it's a significant one at that. Jardine Strategic Holdings will pay $185 million for a 20% stake in the parent company of N.M. Rothschilds and Sons, in a deal that reunites the Hong with its 19th century European peer and marks the Jardine's return to the investment banking sphere after 7-year absence. This is very telling just to give us some further details about this company, how well connected they are with a 20% stake. Obviously, they have something here that is deeply rooted in the financial system because we know the power that the Rothschilds have. But like I said, it has nothing to do most likely with the flash crash, but I wanted to make you aware of how these two companies are interconnected. I'll end the video there. Just basically wanted to tell you that what we have today is very worrisome in the financial system because the computer algorithms are controlling everything. This is extremely dangerous. We've seen flash crashes happen all the time, and there's no telling when the next one will come. It's gonna happen. Hopefully it gets fixed immediately, but we never really know. I just did a video, it was a few days ago it seems, where many stocks in Hong Kong, if I'm not mistaken, started to drop down to the floor, 80% in some cases, and then of course they recover, but it doesn't look good for this type of activity because it tells you that liquidity is very non-existent. So I'm going to end it there. If you found the video informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel, so I do appreciate that very much. And last but not least, if you want the financial education you were not taught in school, these two books have everything that you need. You can get all the details from the foundation, the history, the asset classes, all of that, all the way up to making money, self-sufficiency, and beyond. So check the link in the description if you want the audiobook that's available at themoneygps.com.